Why do you think these 5% sell-offs continue? What does the market want to see here?
Sure.
How do we work through this period?
Absolutely. I think there's a number of reasons. It's the uncertainty around the coronavirus and when and how are we going to contain it. So that's number one. And I don't think we're going to see any sort of smoothing out here until that question is answered. Two, it would be what is the financial impact to the corporations who have to shut down their businesses, and what does that do to the economy? And what does that mean to earnings going forward? And we have to reevaluate that. Three, the economic stimulus, the package that we might see come out of Washington, D.C., that's critical. And then finally, at some point, we're going to see the valuations look very attractive. Not yet, but at some point we'll see that. And that's when we'll see people going back in and investing in the market again.
Lee, it all sounds very reasonable, and yet we have a backdrop where you yourself a couple weeks ago said you were getting pretty freaked out. So has the market met where you emotionally feel, or is it getting worse?
Well, I think Monday was that's where all the technicians, people look at charts and all that kind of stuff. That's what I spend my middle of the night time on Twitter with. I think that sometimes the market gives you the environment. It doesn't give you the nominal price that you're looking for. So here's where I think that what you can do. I think you can rebalance the portfolio. If you have a balanced portfolio, that'll cause you to sell some bonds, buy some stocks. I'm a net seller this week of 10-year treasuries. I'm a net seller of my bonds. And I know all the bears are going to freak out when they hear that. But I think that you have to have some dry powder. We did let go of our gold position because we're getting ready to buy. Now, here's the thing. I've said 2750 is the level that I'm looking to buy. We might buy a little bit there, but the things that I want to buy right here, because I think you can, and I think we don't know, and obviously everybody knows that this is going to impact earnings, and we're so sure of ourselves that this is going to go lower. So I've been adding to some small value, which people think is crazy. I've been adding some emerging markets because they've retested those December, Christmas Eve 2018 lows. But I think as far as overweighting your portfolio and getting in there and making a call, I think you need to wait a little bit and see if we can hold this level. Because if it holds this level, great. But if it breaks, it's going much lower. We could see 2650, we could see 2600. So for now, out of the things that are just killed on lighter volume, right?
2650 doesn't sound all that much lower when you're at 2742. 2000 sounds lower. I mean, I'll grant you that. Kathy, Lee says people say he's a little crazy going into emerging markets, going into small cap value. Is he crazy or not?
I don't think so, actually. I think those are opportunities, at least for the long run, that we've been looking at as well. And right now we're looking at exactly what Lee said, reevaluate your portfolio, upgrade quality. Everything's down right now. It's a great time to reevaluate and upgrade the portfolio.
I want you to come back to that point that I think is a really important one, that really you see no reason for this cascade or trickle or whatever. Right now it's a cascade, it's not a trickle, of equity prices to cease until we get some clarity on a peaking of coronavirus and we get some clarity on corporate earnings. And we're not going to have that until April.
Right. I don't disagree with you, but I also think if you don't get ahead of it, you're not going to be able to be in the upswing when the market turns around. And we know, we've seen it up and down very quickly. So from that perspective, what I would say is we want to start thoughtfully putting cash back into the market, or the cash that's on the sidelines. I have clients calling me up and sending money in and saying, let me know when you think it's the right time to start legging back into the market. So
time to get out of gold, Lee, you said?
Yes, and in fact, I'm ready to say this so that everybody can listen to it and judge me later. We sold gold last Thursday when it was about 1650. And again, I thought I'm early to this. Gold has failed to rally. Why isn't gold at 1800 right now? If there was panic, gold would be 100 points higher, 100 bucks an ounce higher, and copper would be 10 to 15% lower than it is. That's why this is not as bad as we have in 08. And look at the VIX. I mean, look at the amount of selling, and just, come on, guys. Look at what Treasuries did on Monday. That has nothing to do with inflation or anything else. That is just a directional, algorithmic, everybody out there trying to get on that trend. So I think you can take off your gold. I know, Kramer says you can still buy gold. I think you sell it now and use that as cash to get ready to buy. But I think that if you're underweight in stock, don't be. But if you're waiting to get overweight in stock, just give it another few weeks and see if you can get paid. Because until clients stop saying, I want to send you money, and they start saying, I don't want to send you any more money, we haven't bottomed out yet. People are still willing to buy.
I had the exact same reaction to your story. I go, it's great that your clients trust you that much, and it makes me nervous that they still want to get that you don't have to keep them from panicking.
So our clients are definitely long-term view clients. So this is money that they're not going to need in the next year or 2 years or 3 years or 5 years. So what is that going to look like in 5 years? The market, I'm going to bet on the market being higher in 5 years than it is today. So I think this is the time as an advisor that we have the opportunity to make a critical impact in our clients' futures and in their financial futures. So we have to really start thinking outside of the box, think strategically, and take a little bit of those steps in order to put them in the right position.